Hey, guys, welcome back to the Dhruv Exchange YouTube channel. Today I'm going to teach you about ICT order blocks. So, without wasting time, let's get started. Let's start from the beginning. What is an order block? Order block is a candle that is in the opposite direction of the market order flow. It is the area in the market where the banks put the limit in. So, you can see big moves from the order block. I hope so you understood what is the order block. So, now we should look into that, how to spot these order blocks in the chart. There are three types of order blocks. The first one is the normal order block, which runs into the liquidity and gives the market structure shift. So that candle was there for the purpose to take stopping the loss of retail traders. That candle was made by the bank, so then if the price reprices at the order block, you can see a big move from there. It can be consecutive candles also, and sometimes it can be one candle also. Now let's see the second order block, which is the algorithmic order block. It is a candle that is opposite from the order flow and has a fair value gap with it. So, if the price wants to continue the order flow, it will respect the order block, which has a fair value gap also with it. The logic behind this order block is that when the price is in the premium zone or it has taken the liquidity, if it leaves an algorithmic order block, it means that algorithm itself wants to go in more with the order flow. That's why it left the algorithmic order block. So, the rest of the retail traders will see that the market is overbought or oversold, but you will see that the algorithmic order block is there, so you will avoid the trap from the algorithm. Now, let's talk about the third order block, which is candle break order block. Candle break order block is an order block that happens when a candle takes the low of another candle and closes away from the previous candle's range. That previous candle is called candle break order block. But this order block is a little bit risky because it is very small stop loss, but it can give. You have an amazing risk-reward ratio, and it works well when you line up with daily bias and you look for this candle break order block in 1 hour time frame. So, guys, I should tell you that order block is a vast subject, as ICT also says the same, and this is an overview of ICT order block concepts. If you want it in detail, you can check my previous videos or you can get more details from its channel. So, guys, here's the end of the video. I hope you guys like this video. If you like this video, drop a like, share it with your friends, subscribe for more content like this, and check out the links in the description to take your trading to the next level.